G'day everyone, welcome to Pete's Investing, and we're reviewing the Bluechip sample of shares we review each week from Europe and the US and Australia. So this has been a pretty frustrating week in terms of consolidation on the charts, and we'll review those in a minute and to see how they're performing. Firstly, we're not recommending you trade any of these positions or instruments, rather it's purely an educational guide and some trading ideas. And also very importantly, don't forget to hit the subscribe and notification bell and the like button for future updates during the week. And here we're going to start talking about these charts and how they've performed, what positions have been opened, and what the average down process is. But for further information with our strategy, again, reviewing the share prices and the indexes we review each week in these weekly videos. But for historical strategic videos on how to trade these positions, and it helps explain some of the strategies we use in these videos, please refer to the strategy playlist, and that helps explain the simple strategies we use, the average down process, and including money management concepts and ideas. So let's get stuck straight into our first one, which is the CBA Bank of Australia. As you can see here, and each of these segments and these vertical lines is separating the weekly performance of the share price on a 15-minute time chart. Now, as you can see here, it's gone pretty much upwards this week for CBA, although over the last few weeks it's consolidated in this range. So it hasn't actually broken our support resistance range yet, so that's why it's a bit frustrating in terms of watching this action, but we'll see how that performs. Hopefully it continues with this uptrend on this trend line, and it comes and breaks above the $90 level. It needs to break this resistance level first before it gets up there, anywhere near there. As you can see also in the top chart here, this shows profitability for buying and selling according to our strategy, and this bottom chart here, profitability chart, shows the buy and hold, meaning had you entered the trade back here at the same period, back early August 2019, you would have entered 25 contracts and held that position, and you can see how it's dipped, but it's broken above $100,000. So buy and sell, sorry, it's the buy and hold approach versus the buy and sell strategy where we've accumulated during the average down process. So overall, it's the buy and sell strategies performed at $12.68 versus $150 for the buy and hold strategy. So again, we'll just keep an eye out. Hopefully the next week, the CBA breaks above this resistance level. Keep an eye on that. Next, we'll look at BHP Australia. This has been a bit of a downtrend. It's trying to break above that downtrend there. As you can see, it's still below the moving average 200. That's probably the first level of resistance it needs to break, and then come back to any sort of growth prospect in the future. Although we have entered a position of 40 contracts back here, and as you can see here, the profitability's fallen off in line with the price chart. Overall, longer term, you can see here, profitability of the buy and hold is $404 versus the buy and sell strategy. We've accumulated $943 in profits. Next, we look at Volkswagen in Europe. This has performed quite nicely in the last few weeks, although it's come off having bought a few contracts back here early this week. It's dropped off. So this moving average 200 has dropped also. It's below that level there. So we want it to break above that before it has any gains. So let's keep an eye on that. But overall, you can see there $1,111 for the buy and hold strategy versus $1,804 for the buy and sell strategy. Next, Telefonica. Again, you can see there the buy and hold strategy is below our $100,000 baseline versus the buy and sell strategy is $1,148 in profits overall. This week has been again that sideways consolidation. It needs to break above this support resistance level, I should say, for it to have any prospects of going higher. But we're not adding to any of those positions yet, and our profitability is not looking too shabby at the moment, so let's keep an eye on that for the next week. Moving over to the US, JPMorgan. Similar trend, as you can see there, a consolidation this week. but still possibly tracking with that upwards trend line there. Hopefully it comes back towards that trend line and breaks above that resistance level. Profitability on the buy and sell strategy at just over $1,000 versus $760 for the buy and hold strategy. Johnson & Johnson, that too has gone consolidated sideways. It's bounced off this long-term trend line, but it was also tracking down with this downward spiral. So it's actually broken that consolidation there and broken above. So it's a nice sign, although we want it to break above these levels and then above that level there to go any further higher. But again, profitability is about break even for both buy and hold at 640 versus buy and sell at 610. Lastly, for Caterpillar, that's done quite nicely over the longer term. This week has been also a consolidation, sideways movement. It needs to break above that resistance level. And as you can see, the buy and sell strategy has generated 1,564 versus a buy and hold of 1,774. Now, again, I've said this before, but I'll say it again. Going back to about this point here, when a share price continuously rises like this, it's going to add the buy and hold strategy will outperform the buy and sell strategy, only because the buy and sell strategy are exiting positions and not allowing that growth to take hold. But again, overall, most buy and sell strategies outperform the buy and hold strategies because most price charts go sideways with downward motions before recovering. If you can find a chart that does this, going continuously upwards, then you don't need any strategy. You just need to be able to pick those charts and hang on for the ride. But that's probably 10 to 20% of charts will ever do that. Most charts, 80% of the time, will go sideways and with a downward motion before recovering. Let's look at our summary of all those trades. As you can see here, the buy and sell strategies performed over the 18-month period about $7,500, which equates to about just under $500 per month, versus a buy and hold strategy with $4,200, with the drawdowns of each of those. That's it for this point. So we'll look at these again next week and see if they've broken that consolidation and gone upwards, or they continue to go sideways or even downwards. Again, don't forget to hit the subscribe and notification bells and the like button, and we'll speak to you guys next week unless we produce any further videos during the week with further updates as they occur. Thanks, and see you next week.